Good morning, good afternoon, and good evening, folks. This is Naim Aslam back with a little bit of a husky voice because I am down with flu in London, and but we'll try our best to keep the momentum up and get this webinar going. I hope all you guys are well. As always, this is our master series, master class, and in this particular segment, we'll be focusing on stocks, which is quite intriguing, especially the fact that now we are in earning seasons. So, what to make of this current earning season, where the market is moving, how the market is shaped up, or shaping up, shall we say, with respect to this particular one, that would be all part of this discussion. Now, of course, if you thank you, Davia, and for a good afternoon to you as well. If you guys can hear me well and if you can see my screen, please do give me a sound check. Hello, Andres, to you as well. And Amutha, thank you for replying as always. And to everyone else in here, thank you. Now, as always, just a little bit of a disclaimer and risk warnings that's in front of you guys. If you have any questions in relation to that, feel free to come back to your own relationship managers. Now, the contact details for Twitter, I recommend you guys to follow us on Twitter with our handle AvaTrade, and on YouTube is the same handle as well. Now, something that all you guys should know about, and which is very unique technology and only available on AvaTrade among all other brokers, is called AvaProtect. It's a revolutionary one-click risk management tool available on the AvaTrade web trader and AvaTrade Go app. With AvaProtect, you can purchase protection against loss for a defined period after opening a position. If the protection ends and you have an open position that is losing, AvaTrade will reimburse the loss directly into the trading accounts. The only cost is the AvaProtect fee itself. Now, the agenda, because this is a stock webinar, and you may be wondering, why are we going to be focusing on indices, or why do we have on the agenda measuring indices? Because on the back of the stock market, on the back of the earnings which are coming up, we need to know which index we can really jump into as well in terms of risk to reward ratio. Because many of you who are here or listening to this particular segment, is they won't have enough capital to invest across all the 10 or 20 stocks in the several different sectors. You will have a limited capital, but at the same time, you wanted to get a piece of action for every single stock that has any meaning for you or for the stock market. Hence, indices play a major role over there, because when you buy an index, it gives you a wider exposure across all of them. For example, S&P 500, which is known as US 500 on our platform, gives you exposure to all the S&P 500 stocks. So it doesn't matter the banking stocks which came up with the earnings last week, or the tech or the streaming stocks that are coming out with the earnings this week. You will have a piece of action from all of them by buying S&P 500 index or the Nasdaq 100, and same goes for the US 30 or the Dow Jones Industrial Average as well. Now, when I did this webinar the last time, we focused on China-related stock. We talked about how that crackdown, which was taking place at the time, was presenting a huge opportunity in companies like Alibaba, Tencent, and few other. So I do kind of wanted to go back and look at those stocks and then show where the opportunity was, or still where the opportunity is for you guys, and why these could be great addition to your portfolios if they match your risk profile. And in relation to earnings and everything else, we will be also discussing. So companies like Netflix, obviously we saw the stock moving massively yesterday. Someone is saying they can't see my screen. This is not right because everyone was saying that this all is good. You should be able to see my screen. Okay, so here it is again. If you still have a problem with for not seeing my screen, please let me know. Okay, so please always let me know in the beginning if there's any tech issues so we can resolve them straight away. Now, in relation to streaming, of course, Netflix is already out and we'll be focusing on Disney Plus. In airlines, obviously Boeing, Ryanair, American Airline, Delta Airline, United Airline, all of them going to be very much part of the focus for investors who are especially looking at from the lens of COVID-related concerns, how that earnings and how that particular environment has influenced, and how the new approval of COVID vaccine has influenced the stock price for Pfizer and Johnson and Johnson, and more importantly, what can we be really expecting from that? In terms of online retailers, Amazon obviously was the king in this space during the lockdown period. Now, obviously, we have those lockdown restrictions eased off. How the company is performing now, where are the opportunities, what is the stock trading at as of now, and if there is a good opportunity to get into that trade. Same goes for eBay and some energy stocks at the same time, Chevron and Exxon, given the fact that crude oil prices have gone through the roof. Same goes for Brent oil prices, which are expected to go towards $90 per barrel. Could you believe that during COVID time period, this was negative minus 40, and now we are talking about plus $90 per barrel. Crazy, crazy moves have taken place in energy space, and so why that has happened and what does it really mean for energy stocks, because they should be posting some solid earnings given the fact that their margins are huge now in relation to oil prices, where the oil price is really going. And of course, we've been looking at Exxon, Mobil, Shell, and Total. With banks, obviously, banks kind of, they came out with their earnings last week was pretty big for banks because we saw Bank of America, we saw Citibank, we saw Barclays, Goldman Sachs, all of them coming out with their earnings last week. And now, where do we go from here? I mean, sorry, Barclays didn't. Barclays would be, I mean, like this way, the European banks are going to be, they always come up with their earnings a little bit late, but Goldman Sachs, Citibank, and Bank of America, Morgan Stanley, they all did last week. So with that agenda in our mind, so let's move on to our platform and see where the market is very much at currently. Before I do that, would you guys like me to go through very briefly in terms of Bitcoin? Because obviously that is a huge interesting asset. That's a huge interesting asset. Massive momentum has been taking place for the last number of days. The ETF got passed as well, and now the momentum is really on. So if you guys like me, I can briefly go through Bitcoin's price action. Okay, so most of you guys are saying that yes, please do. So I'm going to go through Bitcoin's price action. Excuse me, as I said, not feeling the best, but trying to keep the momentum up. Now, with respect to Bitcoin, obviously this massive rally happened, and we kind of we communicated all of these moves through our YouTube channel and through our Twitter channel. The big signal came just a few days back when the 100-day simple moving average crossed above the 200-day simple moving average in this blue area. And this has happened for the first time in a very, very, very long time, because the last time we saw something like this was back in July 2020. And now we are seeing something very similar happening once again. And that means that prices are likely to really go to the moon, because that would really that's what it's really telling us. There is a possibility that the price may actually retrace a little bit, because now the price has come into this important area of resistance, which runs from 63,400 to 65,000 per Bitcoin. The price has entered into this area of resistance, and now there's this bit of a hesitation of going beyond the all-time high, because once the price breaks beyond the all-time high, the momentum can push the prices towards that 75 to 80,000 Bitcoin for one Bitcoin, towards that particular price level. And then we could see the price reversing back towards the all-time high, that this resistance can become the support at that time. It's very, very important for you guys to remember that, because if the price breaks out of this zone, which it is likely to do so, then this particular resistance is going to become a meaningful support zone, and then this is where investors and traders will be very much focused on. Now, of course, this is not about Bitcoin and this is not about indices, but important for me to go through the indices now after that massive sell-off that happened during the last few weeks or so. The prices kind of flirted with the 200-day simple moving average, violated the 200-day simple moving average a few times over here, but then eventually bulls kind of came back and they pulled the price action back to the upside, and prices started to move higher. But in terms of the overall price action, what we are seeing over here really is that the 50-day simple moving average has crossed below the 100-day simple moving average. If this doesn't move above the 100-day simple moving average, we will have a problem. It is very likely that we could see the price reversing its current momentum, and that is something that we're going to be very much keeping an eye on. And as the earnings season unfolds, the price has entered into an area of resistance. Now, most of the good earnings, we received them last week in terms of the banking sector, now more from the supply chain sector and other important sectors. We are going to get them, and then those numbers or margins may not be that impressive. And what can happen then is that we could see a breakdown in terms of a price action, especially the prices back in this resistance area. However, if we do see those earnings coming good, we could easily see the Dow Jones Industrial Average breaking out of this particular zone to the upside, and a new rally into a new area could certainly begin, depending on how earnings are going to be unfolding in the coming days. So that is something that we have to be very much mindful of, and we have to watch that very carefully. Now, with respect to the US Tech 100 or the Nasdaq 100, obviously it has crossed above the 50 and 100-day simple moving average. It respected its 200-day simple moving average. When the price came close to this 200-day simple moving average, it quickly bounced back to the upside and started to move higher from there onwards. Now the price is coming into this area of resistance. Now, depending on the tech earnings like Facebook, Microsoft, Google, Amazon and all of those ones, when they be announcing their earnings, that is very much going to be driving the price action over here. If the numbers are strong, then we could see the index easily crossing above this resistance zone, the previous all-time high, without any hesitation. However, if we do see those numbers a little bit disappointing from that particular perspective, then we could see the Nasdaq 100 really breaking from this particular price point and then moving to the downside. Now, let's look into the actual stocks, right? And see what exactly is going on from that side. Now, I'm going to begin the conversation by looking at Alibaba and what is going on the Alibaba front. Now, a few weeks ago, when we were talking about Alibaba, we were referring to this particular area of support, which is mentioned right in front of you guys over here. And I said to you guys, I advise you to go back on a YouTube channel and have a look at those ones. I was saying to you guys that this is an area of significant importance. This is where we could see potential buying pressure coming in. Prices haven't been here since 2018. Price actually went below the COVID-19 low as well. When the because this is the COVID-19 low, the price broke easily through that and then came into this area of support. But after coming into this area of support, we saw a massive momentum building up and then taking the price action to the upside from there onwards. So, as you can see, that for the last 3 weeks or so, the 4 weeks, the price started to form bottom into this area. We saw the consolidation, and now the price is popping up. And this is happening in front of ahead of the earnings announcement. For Alibaba's announcement will be coming out very soon as well. We've already seen a massive momentum to the upside, because the price bounced from 137 to 176 as of now. We could easily see this price momentum for Alibaba taking the price action to all the way somewhere around that 244, because this is the area of resistance, or the nearest area of resistance that I would be very much focused on. Under this one, anything less than that one, I will not be very much interested at all. Why? Because this is the at least minimum something that I would be looking at in terms of my risk to reward ratio. And given the fact that the prices were way oversold, I think this could be an area of interest for investors and traders in terms of their risk to reward ratio. Does that make sense? Any questions in around that particular one? Okay, great. So now let's move on to the next one. So what is happening I hope that you guys took advantage of that one. Now let's move on to the next one. And the next one was Amazon. Now, again, on the previous webinar, what we discussed was that this is an area of massive interest where double bottom, or let's say triple bottom, was forming in terms of Amazon's daily chart. And we kind of discussed the prospects of prices moving higher from here, which they did. Now we saw a massive rally in terms of the Amazon stock price on the daily time frame. Now what we see is the price not only crossing above the 250 and 100 simple moving average as well now. The only thing that I want to see now is the 50-day simple moving average crossing above the 100-day simple moving average, And that will really begin the process or the journey for Amazon to go and challenge its all-time high once again. So again, what you will be looking at if you are still not into this particular trade, so you'll be looking at placing your stop losses somewhere near that 100-day simple moving average, and then really going for this particular area ahead of Amazon's earnings, because earning numbers are supposed to be pretty solid for Amazon as well in the coming days, and the street is expecting strong numbers from Amazon. So once again, there is an opportunity. On the upside is that you can put your stop loss just below the 100-day simple moving average and target this particular area. However, if the price breaks below the 100-day simple moving average, you would do what you may want to do is you wanted to put your stop loss above the previous high. So the current high is this one. So you may want to just put your stop loss above this one and then short this particular stock and at least target this area or even potentially 3034 area as well, or just that 3000 sort of a price area, because if it breaks below the 100-day simple moving average or even 50-day simple moving average, it is going to go lower. This area of support is not going to hold at all, and the chances are the price is going to be coming into the next area of support, and that next area of support is going to be somewhere around here. And that should be the focus for investors and traders, what they are really looking at in terms of Amazon. Now, let's look at GE, because they will also be coming out with their earnings as well very soon. But before we do GE, I wanted to do Apple, because Apple is going to be very, very interesting ahead of its earnings, and investors may want to look at it very clearly. Of course, the area of support that we've been waiting for was this area. The price never got into this particular area. I'm going to still leave this area as an important area of support. The next area of support that I'm going to pick up in terms of Apple's price action is going to be 137 to 141. This particular zone could be quite intriguing for us to have a look at it again, and that is only if Apple kind of pulls back into this area, and then we could see that momentum building to the upside. But the reality in terms of the Apple's price action really is that if the price breaks below the 50-day simple moving average, and breaks below the 100-day simple moving average, we may see the price moving to the downside for a much longer period of time, and then this support area may not work. So this could be the area of support where we wanted to have the main focus on, that 132 to 134 area of support should be where we will be looking at in terms of Apple. So once again, I think the momentum has picked up pretty strongly from given the fact from what we can see from the last few days. So you could put your stop losses below the 100 or below the 50-day simple moving average, target the all-time high of 156 or even above, depending on how those earnings numbers will unfold in the coming days. Now, with respect to Bank of America, Bank of America came into this resistance zone, and then that resistance zone obviously became that support zone once again. Give me a second. Let me just clear off something. Sorry. Okay, I'm back. So in terms of Bank of America, what we're really looking at is at this area of support, because now earnings are out, we are not going to take any position right now. What we could be looking at is an important area of entry. That important area of entry really, in terms of the price action, can be somewhere around here, that $40 to $42. So that is the first area of support I'd be interested to look at, because right now we're looking at the Bank of America's price action. I'll be only looking to short rather than going long. And I believe that this could be a great area of entrance in terms of entry area in terms of Bank of America. Now, for Disney, this is quite an important one because they will be announcing their earnings very soon as well. Now, when we look at Disney, we clearly see a downward trend. Now, what you wanted to do is, certainly from the long-term perspective, you wanted to be long on Disney. The area to be long for the opportunity number one is going to be coming in that 151 to 157 as your first area of support. The second area of support, if they miss the earnings massively or in terms disappoint the market in terms of their subscribers number, then the next area of support is going to be 116 to 126. These are the areas of support. If you can get in any of these particular areas, that could be very, very great. Dean, you are asking about Bitcoin. At the beginning of this one, we did Bitcoin's price action, so the recording of this one will certainly be available on our YouTube channel. So I highly recommend you to go and then have a look at that recording again. So guys, I am, despite being clogged up with the flu and finding it incredibly hard to speak, we have gone through a number of stocks in this particular session. And I hope to be back in a full normal condition next week, and then we can pump up some really great analysis then. In the meantime, it's just a review. So these are the two important support areas with respect to Disney, Bank of America. We are not looking to go long, perhaps looking to go short. These are the two areas of entry. In terms of Apple, this would be great area of entrance, or this area of entrance, but as long as it stays above the 50-day, it is going to challenge the 156. Twitter, I think I missed that one. Twitter, I missed it completely. Let's just quickly look at the daily time frame. So in terms of Twitter, the entry area, the great entry area in terms of Twitter would really be somewhere around here, that $58 price mark. So that's where we could be looking at in terms of an entrance. And after that, what we should be looking at is just around that $44 to all the way to $45 or $47, $48 price level. So these two areas. Now, with respect to Amazon, we've discussed already that it's a long trade. Investors are expecting for it to continue to move higher rather than going to the downside. Putting your stop losses below that 100-day simple moving average can really help you to achieve that target. And again, sorry about the little bit less momentum in this one, shall we say, or enthusiasm, because my throat is completely messed up. But I'll be back next week and we will pump out some really great analysis. Remember, you can watch the recording of this one and the previous ones on our YouTube channel. In the meantime, stay safe and thank you so much as always.